Phil C here with you, professional trader at Star Prosper. New month is here, so I wanted to share with you before we get started what I shared with my private client group in the live trading room. September is 615 pips. Huge month for us, over a 50% strike rate and looking at another 10% gain. Trading the plan is paying off, so a big pat on the back there. Disciplined trading. It's a public holiday here from my side of the world, but I don't take days off for you and what you want to achieve when it comes to your trading, because your results are the only thing that matters. Leading with this, remember that our Star Get Together is happening this Saturday, 9 a.m. London market. So for my private client group, be sure to register for that this weekend. Will be an exciting one, welcoming in a few new people, which is good. They stood out to me. In this video, I want to recap a couple of trades from the live room, and then we will take a look at some trade ideas throughout this week of trading, which is the first week of October, by the way. Let's make it a good one. Before I get to the charts, just a real quick shout out to someone who emailed me an hour ago, Kesh. I hope I'm saying that right. Kesh says, "Good evening, Phil. I wanted to take an opportunity to reach out and simply say thank you. I saw your advertisement on our Instagram, and honestly, all I expected was another masterclass on trading Forex. I had no idea that it would be a full training curriculum. It takes a real person of service to offer their time and expertise in this day and age. I'm just starting to review your training material, although I have been struggling for years to learn. Your time to do the one-on-one sessions is awesome. I'm wondering if I should review the material first, then schedule time, or was it meant to be done alongside?" Now, I wanted to share that with you because this individual made my day. I'm really thankful for your sincerity and genuine compliments towards all the hard work that I'm doing here. I am blessed to connect with other beautiful hearts such as yours. So bless you, truly. The material that Kesh is referring to is the Star Classroom. So if you like my style of trading and want to get started for free, it will always be free. I'll leave a link for you below so you can sign up and jump into the classroom material below. Please don't forget to like. It goes a long way to helping me grow. I appreciate every single one of you. So right now we're going to shift over to the charts. I'll recap those couple of trades from the live room, and then we'll take a look at some new trading ideas. All right. And don't forget to subscribe if you're not already. Again, only if you like this style of trading. Okay, let's go to the charts. Here we got the, this is just a video. Not actually controlling this right now. It's just a video that I recorded previously, but this is from the Star Live trading room. And what I was covering here was the pound, what are we on? Pound yen daily time frame. And this is a pattern trade opportunity. So we came in at the 50%, 382, and then we came all the way down into the 886, as you can see there. So this was a valid pattern opportunity that I was watching inside the Star Live trading room. And the initial stop was too big because I can only trade under 90 pips of risk, okay, for my stops. So what I needed to wait for, and what we were watching and paying attention to, was a double bottom here, right? If we got a double bottom, which we did, it allowed me to get stops just under that. So it met my criteria. As you can see, 145 pips otherwise with our stops at the 113. But we can get our stops at the just under the double bottom there, and then we keep our traditional targets. So target 1 right up at the 382 there, and then target 2 was at the 618. So we waited and we were patient for the valid double bottom that gave us a case for entry. We got involved, and as you can see, we're still waiting for target 1 was obtained, and we're waiting for target 2 right there at the 618. Really good profitable trade with discipline and patience. Then over on the Aussie dollar here for our time frame, this is a cipher pattern that we got involved with on the Aussie dollar cipher trade entry. There we got involved just above the 786 because we caught this trade a little bit late. It just gave us a better risk to reward profile. We came down and hit the 382. We rolled stops to break even, and now we're just waiting for target 2 there at the 618. All right, just a recap of the Star Life trading trades. All right, let's go to the STO chart. We'll just get into it here. This is on the euro dollar daily time frame. As you can see, we've been watching this, so you're calling in all these moves, and we called out a trend continuation trade right here. As market comes up, you sell, looking for a retest of the lows. So we're watching for something quite similar here. So a similar setup taking place. But I would like to get, if you want the trend continuation trade strategy, the one here, entry here, stop here, target here, target 1 here, and target 2 there. If you want this strategy, it's also available in the Start Classroom, the link in the description. Sign up for that, and I'll go through a training with you on how to capitalize on the trend so you can make money, whether we're bullish or bearish within the trend. And then later on in the video, I'm actually going to cover a pattern trade, a pattern opportunity on the Kiwi dollar as well. Okay. So what I want to see out of the euro dollar right now, we just clean off this because you don't need to see that anymore. And we continue with the price action, following along with price action here. So we get another move down. That's actually the wrong color. I want to make that blue. We get another leg down. So what does that mean on the daily time frame here? Well, we get a new structure low here. After a new structure low, then we're looking for a pullback, right? And initially we want, that's also the wrong color right there. Just change it. What we want to see is price action to come all the way back up. Now we just almost touch it here, right? Well, arguably we are in that zone, right? Everything is in the zones. What I want to see is price action to come all the way back up into this level right here. So this would be an entry that I'm looking to sell. Okay, this would be a level of interest that I want to sell at. If price action can get a little bit more of a move higher, then I'm looking to sell around this level right here, in anticipation that price action will come down and retest structure looking left. Now, that's the first target. So I'm looking for an entry right up here. Stops would go above the swing high. So, you know, just exactly what we just went over before. Stops would be above that swing high, and then targets would be a retest of the lows down here. Follow on targets. So if price action does retest, one or two things will happen from there. We will get a reaction towards the upside. So as price action comes down, retesting that low, we might get a reaction towards the upside here. Okay. Or price action might head down towards our next major level of structure. But what I want to pay attention to here, now I don't care how far it goes down. What I care about is where I'm getting off if we do head towards the downside. Now, the way that I do that is Fibonacci extensions. Okay, so something else that we cover in the Start Classroom as well. We want a Fibonacci extension tool and take it from this high down to this low and back up in. The level that I'm paying attention to is all the way down at a 127 Fibonacci extension right there. If we do get an extended move out of the euro dollar here on the daily time frame, so if we do extend past this low looking left, I would want to take off the balance of my position down here at the 127. Why? Because that's a level that we have tested, and that's a level that I want to get out for target 2 to stay profitable trading our strategy, okay, which is the trend continuation trade strategy. Other than that, there's nothing else that I want to pay attention to here on the euro dollar. So we'll take a look at Aussie yen and then we'll head over to the Kiwi dollar. Okay, so Aussie yen. Now we've been in this one here. Well, actually, I need to scroll out like this. So we've been in this big pattern for quite some time. A lot of time has overlapsed here. We came down and we entered here at this pattern ages ago, right? We continue to follow this one on the Aussie yen. And then we came all the way down and we hit target 1. What do we do with the if-then syntax? We come down and hit target 1. We take off half of our position. We roll stops to break even, which is exactly what we did. And we're looking for follow-on targets down here at the 618. Okay, so target 1 at the 382 and target 2 all the way down here at a 618. Now, this we don't need anymore either. This drawing, see if I can grab it. Oh, no. Grab it there, like that. Don't need to pay attention to that because this pattern is now invalid. So we just get rid of that and we don't need to watch it anymore. So I'm expecting, as we can see right here, we're coming up to retest what we have come up and retest the highs looking left there. And most likely we may get a move a little bit higher and stopping us out here for break even. What we do after that is just delete the analysis and then we start through the process all over again. Identify, predict, decide, and execute. And we continue this process, as my private clients have seen in the Star Live trading room, every single day. We come in and trade a 9-pair portfolio on 3 different time frames. And then we come in and then we do the same thing. Doesn't matter if the trade hit target. It doesn't matter if the trade hit stop. After that initial trade is over, we then eliminate the analysis. So we delete the analysis and then we start that process over again because we want consistency in our analysis. And the byproduct of doing that correctly, the consistency in your analysis, is you tend to get the same results. What are those results? Well, positive risk to reward profiles. And if we do that over and over with consistency, we have an edge. So we gain more than we lose. So it makes sense to come in and trade that every single day because we want to replicate those results, which is positive results, which is profitable results for us. So that's what we're doing with the Aussie yen. And lastly, what we will cover now is the Kiwi dollar here. Now we are bearish, as you can see, price action moving from top left to bottom right here. What I want to watch for this week, the Kiwi dollar here, is a pattern opportunity. So I want to sell a potential pattern opportunity if price action can continue to move towards the upside here. If we do get a little bit more of a move, then I'm interested in this level right here. And I want to look for a selling opportunity. So let's cover that, what we're doing right here. Okay, so this is the previous high that I want to pay attention to because we have a big move from top left to bottom right here. So this is our impulse leg. So this swing right here, this swing high to this swing low, is the leg that I want to pay attention to. Now, I want to take a Fibonacci retracement tool. What I'm about to cover here is just a pattern trade opportunity, and with that, we use Fibonacci retracements. So we'll take a Fibonacci retracement and we'll go from swing high all the way down to swing low here. As you can see, we have another move from bottom left to top right here. Right here. So I have another swing, which is our A to B. And as you can see, price action comes all the way back down. And this gives us a nice W formation here. So it looks something like this. But I want to use the triangle tool to make it easier for our eyes to see. So again, we have our impulse leg, we have another move towards the upside, giving us our minimum of a 382, okay? And if you draw another Fibonacci retracement and take it from our swing low to this swing high like this, we need a minimum of a 382 as well, which puts us on that pattern alert. Price action does come down and hit the minimum 382 right there. We come all the way down and hit the 618. That gives us a valid BC move. And lastly, with pattern trades, we want a CD completion. So C all the way up to D, which would be at an 886 Fibonacci retracement. So let's do that now. Initial move down. We have another move up, giving us our B point. We have another move back down. And lastly, we want to look for that CD completion up into a Fibonacci retracement. So take the retracement tool again and go from our swing high all the way down to our swing low. So exactly like we did the first move, like this. And what we're looking for is that CD completion all the way up into an 886 right there. So let's move our box up like this. So our 886 would be the level that we want to sell. Okay. Now let's grab the triangle tool to make it look nice and pretty, of course. And we've got our X to A to B right there, B to C, and C to D all the way up into an 886. Okay. So again, using the if-then syntax, if price action moves all the way up into our 886, then we're going to sell into target 1 and target 2. This is a potential bat pattern trade on the Kiwi dollar 1 hour time frame. Okay, we are right, our entry right here, we are right at structure looking left. Okay, the significance of structure is historically price action reacts from that level. If so, then we want to position ourselves right here to take advantage of if price action does react from that level towards the downside. We want to make some money out of that position. With the bat pattern, if we're half right with the positive risk to reward profile, then we are going to do incredibly well trading this with consistency. So before I finish up today's STO, let's go ahead now and draw in the entries, stops, and targets. Again, we take a Fibonacci retracement tool and go from swing low all the way up into swing high. So this would be our 886. We would sell right here in anticipation that price action moves down into a 382 for target 1 and 618 for target 2. So it would look like this. Just make sure that I get the 886 right. Take our dealer thing here, right there. And what we want is stops at the 113, because if price action does move towards the high side, which sometimes happens, not every trade is a winner. That's why I bang on all the time about being half right, because that's all you need. With a positive risk to reward profile, again, you are going to be profitable in your trading. So the significance of a stop placement means that we're wrong initially on this move. If price action does move towards the upside, we want to get out. So that's known as cutting your losses, because we may get a retracement here, back down into structure, and then a continued move towards the upside, retesting the highs. So you want to get out here, not all the way up here, because again, you know, with trading, you want to preserve your capital. Coming back down into our bat pattern here, entries at the 886, stops at the 113 right there. And also you want targets right here at the 382. So we have just over a 1-to-1 risk to reward for target 1. Now, let's get rid of this, clean that up. What we want to do is clone this or copy it and drag that over to the side. Because in all the trading that we do here at Star Prosper and the strategies that I trade, we always take 2 targets. We always take two positions here. So the first one is at the 382 for target 1, and then our second one, we drag that down into our 618, and that would be our target 2. And again, as you can see, if price action moves towards the upside, giving us a CD completion right there, we anticipate that this price action may roll over. Again, we're talking about probabilities here. We may get a move back down into, so if price action rolls over, into 382 for target 1 and potentially into target 2, which is our 618 there. So that's it. That is the pattern trade opportunity here that I'm paying attention to with this star trading overview on the Kiwi dollar 1 hour time frame. Okay, so anywhere within this box right here is our potential reversal zone and is a valid sell opportunity into the Fibonacci 382 and 618. Okay, again, if you like this style of trading, please like the video for me. It does go a long way to helping me grow. I'm tremendously thankful for all the compliment support that I do get with the people that I work with at the moment. And those of you who take precious time out of your day to be here, I'm truly grateful for that. Okay, so that's it for this week's star trading overview. If you want to see this every single day, Monday to Friday, London market open, then be sure to get in touch with me and we can have you part of the private client group here as well. Lastly, the star get together is happening on Saturday. I said that at the start of this start of the video, and that is just where all our traders get together and then we go over what we are working on in this month's trading. What are our goals? What are we focused on? And what are we doing in order to get there? And it's just a chance with me to meet all the clients that we do have and help out one-on-one with how to get there in the most efficient way possible. Because again, as I mentioned, your results are the only thing that matters. Okay. Thank you so much. Until next time, be safe, enjoy life, and I'll talk to you soon. All right. Thank you so much.